Most importantly, raising capital. Talking about entrepreneurship, but how to raise capital. Because so if you're going to be an entrepreneur, it's your number one skill. Can you raise capital? The investing strategies are different. And John McGregor is a dear friend from Hawaii, and he raises capital. He sells investments, or he used to the E's and S's, employees and small business owners. Because if you want to survive this crash, it's best to be an entrepreneur.
Someone saying, my company will take care of me. And that is a recipe for disaster. When you think your company or someone else is going to take care of you, that always leads in financial despair.
Because you look at where the layoffs are starting, it's starting in the banking industry. Because they don't need no loan processors and stuff like this, because the real estate market is crashing. And the trouble with the real estate market, the stock market, bond market, real estate market. The trouble with the real estate market, when it goes down, it's like a sinkhole. It takes businesses, neighborhoods, it takes everything with them. And again, the message here is this: there's one of the reasons the rich get richer is they invest in different investments. So Mike is my oil guy, and the reason I like oil is because you can't print oil. You can print stocks, you can print ETFs, you can print money, but you can't print oil, yet at least. A big boom came to America with fracking, right?
Right.
Can you talk about that really quickly, what happened?
Administration brought us back to the, number one energy producer in the world. And, we were going to obviously be the most dominant energy producer in the world until this administration came on and started pushing the Green New Deal again.
Why are they doing that?
I think there's a lot of lobbyists. I think that, there's a lot of money to be made in this big push.
They're screwing the middle class, because when the price of oil goes up, inflation goes through the roof.
I don't think they really get that. They're seeing it now, certainly, but, they're in it for the money, and people have made a lot of money on this green push. They, look at Germany, for example. I mean, a prime example. Germany, they tried to push this green push, and now they've gone back to burning coal and wood.
Yeah, they're chopping down trees now.
Yeah,
because it's going to be so cold this winter.
And if you look at China and you look at Russia and you look at India, I mean, none of these countries are embracing this climate accord. I mean, it's just the U.S. is pushing this and hoping these other countries are going to come along. But China, they're building a new coal-fired power plant every week.
Jesus.
You don't hear a lot of talk about is that these windmills are actually killing fields. I mean, they kill birds, they kill eagles, they kill raptors. I mean, they kill all types of birds, and they want to continue to put these massive amount of windmills up. And if you look at one gas-powered power plant, if you were to take that power plant offline, it would take, if you use solar, you would have to have 40 square miles of solar to produce the same amount of energy as one gas-fired power plant.
Right. If you play the cash flow game, there's a thing called the fast track. And the reason you want to get out of the rat race onto the fast track is that's where the accredited investors invest. And there's not that many of them. But one of the reasons the rich get richer is they get better investments and they pay less taxes. And the biggest bubble of all, most people don't know this, is corporate credit. And what was happening during the boom when they kept dropping interest rates, zero interest rates, many companies couldn't grow their companies. So they would borrow off the balance sheet of their company and they'd buy back their stock. And they would stock the company full of this debt to buy back their stock. Like Apple just uses their credit to buy more Apple stock. I mean, that's what it means. And now the stock markets are crashing. The same with bond markets. The reason London or England just went down is they couldn't make the pensions, the defined benefit pensions for the people. So what they did is they borrowed money at 0% to buy bonds at 3%, hoping that would pay for the retirees. And there's, like in America, 10,000 a day retiring today. And all of a sudden, when they did that thing where they reversed and the interest rates dropped, bond markets dropped. And on top of that, when we strike oil, I get a depletion allowance too. What does that mean?
Well, the depletion allowance is on every dollar that is produced or you make income from oil, the federal government allows you to take a 15%, depletion allowance. And so you're able to take that off of your income that you're generating from oil and gas. And these types of plays, they've been defined now where it's kind of like a bullseye, right? You know where the bullseye is, and that's where you want to drill at.
And what's happened is some of the things I've invested in, you're still paying me, right?
Right. You're getting a check every month.
In the biggest crash, January 2023, just like Mother England went down, because they're playing games with money and interest rates and all that other garbage. But what do you think what does a financial play say to, let's say, a 68-year-old, 70-year-old guy whose 401k is toast? See that, I go. So that's why when I was in 1974, when I came back from Vietnam, Rich Dad says, you got to learn how to sell. You got to raise capital. And if you can't raise capital, it traps you. Because the biggest stock market crash in history is here. It's coming around January 2023. What happened in England, that's going to happen in Japan, already happened in Argentina, and we're toast.